Well, it is another good week for investors with the S&P 500 and the Nasdaq hitting new records, but the Dow is lagging behind. What might that mean? And the Mag 7, or maybe it's just the Magnificent 1, seems to be leading the market. Let's find out what all this means for you as an investor. Joining us on the program is Mish Schneider from Market Gauge. Mish, let's begin with the top and the major indexes where you have the S&P and Nasdaq in record territory, but the Dow's a laggard.
Well, we had something like 44 new all-time high record-setting days this year in the SPY, which is in and of itself is incredible. And obviously, with the growth stocks being all the rage, it's no surprise. The Dow Jones Industrial, some of those laggards have been a concern. Well, they haven't been a concern and now become a concern that drove the Dow originally up to 40,000, like General Electric, for example, has come off. IBM hasn't really done anything. So where people were going, yay, big blue, I think the realization is that overall, that is not where the money has been coming into in terms of the big funds. As we know, the funds, although they're saying that a lot of institutional sellers have come into tech in the last couple of weeks, we do know that for the retail space and a lot of the not high net worth wealth funds, they're very, very saturated into those areas of the growth stocks and the tech stocks. And so I think it's really more a matter of lack of interest than something inherently wrong with the manufacturing sector. But if we want to talk about the manufacturing sector, there is obviously a lot of hype around reshoring and bringing industry back into the United States. And that has a high ticket price to pay, for example, obviously means higher wages for people. It means trying to fill the jobs. It means a more infrastructure expenditure, which also is inflationary. And so some of the economic statistics has shown some contraction in the manufacturing space, regardless of all of that, because of a lot of those reasons. So this is probably one of the more, this is a period of time right now where you can get a group of people sitting around a table, all from different walks of life, whether it's economists, politicians, people who are CTAs, whatever it is, you can get a whole bunch of people and people like me who are traders, and everybody's going to say something different. So I think it would be really good for us to focus on the few areas that most people don't talk about in the discussion. And that is, what's the implication of AI? What's the implication of reshoring? What's the implication of the high government debt that hasn't seemed to recede at all, to the high government spending, which also hasn't seemed to recede at all, to the fact that we have all these other influences geopolitically, not to mention we're going into a volatile weather season. We've had obvious disasters like flooding that has happened in Minnesota. I mean, it's like we can go on and on and on. So it's really going to be a matter of where we should go and then what our prediction is in terms of where the market will go as a result.
Well, let's talk about something that is very much in the political scheme of things. We're talking about the green transition. One of the hottest things in the market are AI stocks and the cloud. And nobody is looking at what does all this mean for the grid? What does this mean for raw materials? You can't make windmills, you can't make solar panels, you can't make EVs, and you can't expand the grid without raw materials. And let's focus for one right now, which is copper. Now, copper had a nice run here, but it's been pulling back. What's your take here?
Well, I couldn't agree with you more. So even though you say no one has, I've written article after article in my daily posts about the consumption needs for a lot of the metals, industrial metals, copper, of course, being one of the kingpins, but not just the metals, also natural gas, uranium, coal. Then, of course, you get into the other sources like silver, which is for conductivity, copper, of course, being used a lot for the wiring, even solar energy. We can talk about that. But not only has that crashed, by the way, in terms of its price, but you can't necessarily power your appliances on solar. That could be an energy source, but you still have to plug in, which means an AC current, which is grid. So yeah, this has been a huge area of topic for some people because the statistics came out that right now, AI and data centers use about 2-3% of the electricity usage. And in 2028, they expect that to go to about 19%. And that's just on the data centers themselves. I also read today that the number of PCs that are going to have to be sold, because most people will not even have the ability to use AI on their existing hardware, also has to go up exponential. And of course, those too are made from raw materials. So the basic thing, what you're saying, Jim, is raw materials cannot be ignored. So I just wanted to put that backdrop out there. And in my looking for inflation in all the wrong places, especially on the heels of the fact that the PCE calmed some nerves today, we do have to be concerned about these areas, not just with the metals, but the energy space in particular. And even some of the soft commodities, by the way, are starting to look a little bit more interesting. So let's go to copper.
Yeah, one of the things that really strikes me about copper, I've taken a look at copper discoveries in the last decade. They're hardly anything. And then you take a look at what really concerns me. Let's take Chile, the world's largest copper producer. Their ore grades, Mish, have dropped down to zero point 0.6 grams per ton. It's taking 800 tons of rock to get 1 ton of copper. So it's not just the dearth in discoveries, but it's the major drop in ore grades. They have to mine more rock to get the copper.
Yes, and yes, and also it's owned by the government in Chile. I mean, that's not private enterprise. So then you have to make certain assumptions based on what the government wants to be able to control. And driving up prices of copper is good for the Chilean government. One would, amass from that assumption. But also, I've been looking a lot at South Africa because South Africa is a huge mining country as well. And that ETF, which is EZA, took a huge fly last week and then sold off, and now it's coming back up again. So we've been looking at that as an investment for the same reasons, is that they have a lot of money to be made based on upping their mining production, and they also mine copper. It's not primary, but gold obviously would be one. But it all is part and parcel in what we're talking about, is the mining community. And do we have enough supply, and can we get that supply out to meet the rising demand? And I think right now, that's the whole idea of the inflation, is that I don't think we can get that done fast enough because A, it's government control, B, it's subject to other conditions outside of the control. These mines are still not really the best places to work. You have to pay miners more money now, I would think, to get them to go in there. And then how fast can you pull it out and then get it out? So a lot of these mining companies have looked very interesting to me right now as a result, not to mention, like you said, what's happening with copper in Chile, and then, of course, what's happening with South Africa. But let's just look at the actual commodity. I was just looking at the chart of copper, and it had a major breakout over 420. It got to 520 and then had the major sell-off, and a lot of it has to do with copper also reflecting Dr. Copper, the U.S. economy, and the housing market, which has been having issues, even though, again, so nuanced. I mean, you can't even say, oh, yeah, housing is going down, prices are going down, people aren't buying houses because of mortgage rates. Actually, prices have gone up. So it's like, and in some pockets, there's still very low inventory. People don't want to let go of their existing homes because they have low mortgage locked in at 3%. So copper has been going down, I think, mostly because of the fear of the housing market and a fear of potential recession. And so what happens first? The chicken or egg kind of thing. What happens? Does the people say, oh, we don't really care about that, but copper is going to be in this high demand, and there's not enough of it to fuel AI and data centers or solar technology and all of that we just mentioned? Or is it going to be, there's a glut of copper? Well, I can tell you one thing that just happened here in Santa Fe. and it may not be very meaningful, but I thought it was interesting. There were two major restaurants here. They're huge. They were broken into in the middle of the night, and guess what was stolen? All the copper pipes, all the copper wiring, which is an amazing thing to go in. And they basically destroyed the restaurants to get out the copper. So there you go. You know, if you had to have some kind of weird indicator of what people are running out of stores with to steal, maybe that means something. So I would just say, let's look at the math on the chart. 420, we get through 460. I'm actually almost looking at the potential of buying copper right here, whether you're looking at the futures chart or whether you want to look at something like COPZ, which I like to trade as well. It turned around after this big sell-off. It's sitting right now at a major breakout. I think if you can get back through 440 or even 460, if you wanted to wait a little bit, and that would be clearing the 50-day moving average again, in which case I think you have a very low risk to under 420. But yeah, from a fundamental reason, there's a lot of reasons to be very bullish in copper.
I want to throw in an anecdotal story. You mentioned about the restaurants. There is a car dealership here. It's going to be one of the biggest new buildings for a car dealership in the entire city. They were supposed to go, the building was supposed to be finished last December. When they brought all the copper in to do all the wiring, thieves got into the building, stole all the copper, and the building's still not done.
There you go.
I want to come back to commodities here, but I want to talk about, everybody was watching the debate last night, about some of the broader implications for investing that might change given, let's say, a Trump presidency versus a Biden presidency, things that come to mind, the war in Ukraine. We're looking at small business sentiment is down in the basement. We're talking about how it might change in terms of, let's say, drilling, whether it's oil or natural gas. What might change? Taxes, another one. So let's kind of move into that. What might be the investment implications for, let's say, a Trump presidency or versus, let's say, a Biden?
Well, they both like to spend money.
Absolutely.
Right. Trump added $7 trillion worth of debt when he was president. And he proved that the way he spends money is different than the way Biden administration has been spending money, but they both spend money. So government spending, I don't see that as a huge run by either one of them to balance the budget or even care very much about the budget for whatever reason. And so the way they do it will be different, but I think the implication is the same, is that I still believe that we have not seen the peak of, in certain areas, definitely we've seen the peak of inflation, but we haven't seen the peak in not only things that we're talking about, but even looking at gold and silver for sure. And so let's just take it point by point. So in terms of, I think it could be pretty obvious that Trump would try to end the Russian-Ukraine war, or if not end the war, stop financing the war the way we've been doing it. So there's money that Biden spends that Trump wouldn't spend. Does that help the U.S. economy? Well, only insofar as that it actually does resolve the war. We don't know that that would be a given, even though Trump thinks that he could easily just have a conversation with Putin and essentially ameliorate him enough to say, okay, we're going to stop. Because, because Putin's got other agendas outside of the United States, NATO being a large part of it. But let's assume that everything's okay. So that would be probably a good thing in terms of government spending. As far as small business sentiment, I think small business sentiment is negative. But do I think that Trump can change that? Well, obviously, people love deregulation by government. And I'm not an expert, by the way, on whether or not some of the deregulation that happened under the Trump administration has been reversed under Biden. So I couldn't even begin to tell you that I know that or not. But what I could say is that so much business is being absorbed by corporations that has absolutely, I can't imagine Trump will have any impact on whatsoever. I mean, basically, can you say that Amazon People starting retail spaces can compete with Amazon. That people who want to do electric vehicles, for example, like some of the smaller companies and some of the charging companies can compete with a Tesla. I mean, I don't know. I think that the way of the big corporations has been a trend for a long time. So I don't know how much the sentiment can change in any kind of real way. As far as taxes, I mean, if he lowers the taxes, then we have a situation which is super inflationary. And then here's the real interesting thing that you mentioned about the green energy. So right now, since Biden has been president, oil has gone up and solar has gone down. The price of, if you're looking at the stocks, if you look at TAN, for example, the ETF, that thing has crashed. It's like on 52-week lows or darn near it right now as we speak. While oil has gone up tremendously this year, is now trading not at the highs, but at over $81 a barrel. So if Trump came in and said, we're going to drill more, and he drives down the price of oil, potentially, what is the cost of that, really, essentially? Because now you've got the lobbyists who are going to get really pissed off on the EV space. And this is really going to get down to who greases the wallet more for the government. I believe always the lobbyists. And so I don't know. I think they're both inflationary for so many different reasons. Trump will put pressure on the Fed to lower interest rates. Trump wants a weaker dollar because it's better for the market. It's better for business. So, it's hard to say, Jim. It really is hard to say. My sense is if you rise above all of that, what if, I still think gold and silver are great investments. I still think that we're going to see issues in terms of supply chain because of other factors. Labor is still kind of a wonky thing. Do I think he could tighten up the border? Yeah, but we don't even know how that's going to impact the economy. Biden had that big faux pas last night about how millions and millions and millions of illegal immigrants are spurring the economy. He probably didn't mean to say it like that, but really what he was trying to say was you need a certain amount of immigration because they work the jobs that Americans don't want to work. It's an old kind of a thing to say, but it happens to be true. It's so complicated right now that I just want to keep my eye on the ball of what happens with the certain indicators that I love to look at. One would be the long bonds, one would be the dollar, one would be the price of gold and silver, the relationship between the two, obviously the price of oil. And then, I still love my sugar barometer, which has gone from 18 cents to over 20 cents in the last few weeks, and also could be a player in how we look at inflation going forward like it was in 1979.
I look at you and I are just one of the few who have been talking about the implication of raw materials, but I just look at the demand for copper, the demand for silver. Silver is going to be running a supply deficit well into I think it's 2050. We have a chart of that. You take a look at copper. Copper is going to start running a deficit. If you take a look at mining in general, it takes 10 to 15 years to bring a new mine into production. And you take a look at the dearth of discoveries as we talked about. And not only that, a lot of the most prolific mining belts are controlled by governments, which may have totally different agendas than the private sector. So I just can't help but believe if you're looking longer term over the next decade, that we're going to be looking at higher raw material prices.
Oh, agreed. And by the way, one thing I wanted to mention about, the green energy, which Trump, basically is against. What I'm saying is it hasn't exactly gotten a boost under the Biden administration because EV prices have gone way down. I mean, yeah, Tesla's getting a bid because of the debate, because there's been an association between Trump and Musk. And obviously Musk and Tesla are much more than just making EVs. But look at the price of lithium. We're talking raw materials, but if you look at lithium, it looks sick. It barely has a heartbeat. And yet lithium, as far as I know, unless there's a technology that I haven't heard about yet that's ready to go, is how you create the batteries for EVs. So if Trump comes in, it could have actually the reverse effect, in essence, in that just like it happened with Biden. Everybody thought oil was going to crash and electric car usage and lithium would rocket. And instead, it's just the opposite. So I agree with you. I think you're going to have to look at the pockets. The demand in AI and data centers is real. The power grid system cannot handle everything. If there's any kind of crisis whatsoever, let's even talk about cybersecurity, which is why the cyber stocks have been doing so well, the defensive stocks. It is really hard to predict. But what I can tell you is regardless, what goes up in uncertainty is gold. So yeah, I think gold is holding 2,300 like a rock and has another really good rally just waiting in the wings. Silver, which is not just the poor man's gold, but also the industrial usage that you just mentioned, is holding up really well, above 29, gets over $31 off as she goes again. And then you have some of the other, like copper you mentioned, even aluminum, platinum starting to look very bullish all of a sudden. Yeah, I think people really are remiss when they don't look at economies have to be driven by raw materials at this point. We are not a disruptive technology where we don't need these things yet, maybe 15 years away.
The thing that really strikes me, you've heard the IA came out and said we're going to have a energy glut by the end of the decade because we're all going to be driving EVs. I don't see that. But the Energy Institute just came out with their 2024 study. They took over from the BP statistical review. The amazing thing about this, Mish, energy consumption hit a new record last year. Mm-hmm. Coal production and consumption hit a new record last year. And if you take a look at energy itself, it still supplies 81.5%. Yes, we've seen alternatives rise, but we still live in a fossil fuel world. And if we're talking about minerals, it takes energy to produce those minerals. So I found it interesting because you're hearing all this talk, we're not going to need gasoline, we're not going to need diesel anymore. But the evidence shows it's just the opposite. Record oil consumption, record coal consumption. So the statistics are pointing to a different outcome.
Yes, everybody expected one thing with a Democratic administration, and instead oil demand's gone up and EVs have fallen like crazy. And even if you thought Rivian was a great buy after the deal was made with Volkswagen, if you look at the price of lithium, what it's saying is right now the future of EVs looks very questionable, and solar energy looks very questionable, even if it is the inevitability, where investors are looking out over the next year. And unless we see some kind of major turnaround, you have to still think oil is the way to go, fossil fuels.
So as you look at this market right now, as we mentioned, we talked earlier, you have a pocket or a handful of stocks that are really driving some of the major indexes. In terms of pockets of opportunity, I keep coming back to raw materials. I keep coming back to energy, because without those, we don't have an economy.
I completely agree with you. We have here at Market Gauge, we have two different ways that we invest for our clients. One is through momentum trading, and that would be our TSI, our trend strength indicators that our models do. And our models go from NASDAQ All-Stars to large cap leaders to small cap earnings growth to sector rotation to global economic macro. So we kind of do that to smooth out the returns, obviously. And of course, as a result of that, the models have gotten into and in and out of really, because we do profit taking on the way up and we have stops. We're still more of an active investment firm as opposed to a buy and hold. And so, so of course, NVIDIA and Advanced Micro Devices and Supermicro and all of them have been where the big money has gone. But what I'm really looking at right now is, like you said, they need to be fed. They need to be fed, number one. And number two is, I really think that the story that I saw today that came out, that most people, it's kind of like, it reminds me of 3D printing. This is my analogy. When 3D printing came out, people thought, oh my God, this is like the greatest thing since sliced bread. You know, we can 3D print ears and we can 3D print organs and skin and aerodynamics. We made airplanes much lighter because of 3D printing. And oh my God, everybody invested in DDD and that stock soared. That stock is trading just slightly above $3 a share right now. Why? Not because 3D printing isn't still the greatest thing since sliced bread, and I don't even think we've used the technology anywhere near where its potential is, but because the retail space. Do you know anybody with a 3D printer other than maybe an artist in their home? Right, it has no retail use. So now you have to say, okay, what's going to happen with AI? So in order for most people to access AI, and this is what I read today, they're going to have to upgrade their PCs because most PCs, as they currently exist, don't have the capability to run all of this software, AI software. And now, as these things are going to continue to develop and develop and develop, that means that your PC could be obsolete every year. So now you have to say how much of the retail space are going to continue. I mean, with iPhones, it worked pretty well for a while, right? I mean, people kept buying and buying and buying new iPhones. Are they going to do the same thing with PCs? Are they going to keep buying new PCs to keep up with the AI development because it's going to make their life so much better? And I don't know the answer to that, but I do know that that's a factor. And I also know that there's a fact, like you said, the price of raw materials will drive the prices of these PCs up as well. And not only that, besides everything we just talked about in terms of the raw materials, what does that mean for the overall technology? If we are just a tech growth economy, we still have to look at the things within the United States. So that's why I still watch the retail space underperforming. The transportation space, well, up until FedEx reported, was well underperforming. Now at least it's gotten a boost from there. That's promising. The small cap space, still underperforming. These are the companies that produce within the United States. So I think you've got to continue to watch those areas to really get a gauge on whether or not tech can keep going and going and going. Because at some point when those ratios get so wide, either everything collapses or we have to see a movement in the areas because people believe we're going to have economic expansion, or they don't collapse that much because they're so undervalued already, but tech comes down to narrow that ratio. Those are the things I'm watching out for. And I can't even tell you that I'm going to predict which way it's going to go. But at this point right now, I don't see any great reasons for great economic growth because we still have a lot of issues, and labor is actually starting to decline a little bit, right? The unemployment numbers are starting to go up a little bit. The jobless claims are starting to go up a little bit. Some of the statistics are showing lows that we haven't seen in a while. It's an interesting time, Jim. Let's put it that way.
Well, speaking of that, as we close here, Mish, if our listeners like to follow your work, you're a prolific writer, tell them how they could do so, if you would.
Well, I do produce a daily. It's called Mish's Market Minute, and our website is marketgauge.com. You can get it there. If you want to know more about what I just mentioned, everything I just talked about in terms of the inside sectors of the U.S. economy are my economic modern family. You can also find out more about them by reading my book, Plant Your Money Tree, or looking at a part of our site. And I'm an active social media person, so you can always find me on X, and that's at Market Minute.
All right. Well, Mish, as always, it's a pleasure having you on the program. I hope you have a great 4th of July and come back and talk to us again.